Steve, I was speaking with the audience in Espanol. Thank you for coming. Thank you and happy Monday. And at the end of the day, in our last conversation, we were talking about the oil, where you were a little bit bullish on it, and you also were talking about some sort of retracement in the markets. So we've seen the oil right there stubborn at $62, $63 per barrel, but we also see new highs in the technologies indices and also in the S&P 500. So what is the recollection of facts that you have as of today? Because obviously the market has been going higher and higher, and there is this irrational exuberance that we're seeing all over. Thank you for coming, Steve. Tell us, please.
Well, first of all, thank you for having me, and I think this will be very informative for the viewers. Okay, what you're going to see right now is it's September. People are back. Decisions are going to be made. Now, we've seen two things. Obviously, the EV market is slowing down. You're seeing that with Musk. But what you're also seeing is that there will be a pullback. There will be a pullback, but the pullback is a buying opportunity on selective items in the market, especially the sector like pharma and certain technology companies. Now, as far as oil will go higher. The market's telling you that. Gold is just, you saw gold take off. There's inflation. There's no question there is global inflation. And a country like Venezuela, for example, has more oil than Saudi Arabia, but they can't refine it. And without a refinery, you have a worthless, not a worthless asset, a difficult asset to sell on the open market.
So listen, you're absolutely right with respect to Venezuela. I don't want to argue that, because at the end of the day, it's a very heavy oil, but there is rumors that the administration, and I'm talking about the Trump administration, is looking for a change of regime. And if that happened at some point, Steve, I'm afraid that the oil prices might collapse because of the sensation that the U.S. or the West economies will be controlling such a major access to oil reserves. In any case, I think we spoke a few weeks ago about Goldman Sachs forecasting around $55, $57 per barrel in 2026. And the other thing they are taking into consideration, Steve, is that Russia and Ukraine will enter into a peace and long-term peace agreement. That being said, there is some sort of, let's say, fears that the economy might slow down in Q4, and that's why they might be cutting rates. So you still being bullish in oil in Q4? And if that's the case, what do you think will be the three major points that we'll have to keep ourselves completely focused on that can actually put the oil at a higher prices, let's say $70 per barrel in these new weeks, in these incoming weeks?
The way I look at it is as follows. The transactions between India, China, and Russia, it's about oil. Okay, it's that simple. They need energy. All right, and based on adjusted inflation, oil could be $130 a barrel, even higher. I'm not saying it's going to $130, but what I'm saying to you, it's such a psychological factor on the economy. And you're also seeing that the big oil companies are diversifying and they're looking for acquisitions. You're also seeing it in the banking sector. You saw it today, PNC's looking to be a big regional. They're trying to go national. So you're seeing different factors of the market. You saw JP Morgan today is going to take over the Apple Card. So you're seeing a lot of different dynamics in the market with the sentiment as follows. China is absolutely cheap at these levels. You're going to see China go to 27,000, 28,000 on the Hang Seng. It's been a big rally, but relatively it's cheap. You saw today the Merval, okay, the Merval in Argentina down 12%. You also saw the loss of confidence in France today. All right, so there were a lot of dynamics going on in the market. And like I said, September is a critical month, September, October, and November. But overall, the market will go higher based on two factors, the psychology and the sentiment of the public. And you're going to see that that sentiment is there. People want to be in the market. It's that simple.
Steve, to change the topic, you mentioned China. You mentioned that we might see a growth. I was checking some economic indicators that just hit the wires last night, early morning here in the US, and China seems to be debilitating. So you mentioned that you see the China going up. If you can articulate a little bit about it, I know there is heavy negotiations between delegations, Chinese and the US, with Scott Bessent talking directly to very important people in China. We might get some sort of surprise because I think Xi Jinping and President Trump will meet in Asia. Not quite sure if it's in the next trip that Trump is doing, but it might surprise the market. Do you think that we need to be definitely bullish on China? Do you think that the factor will be that potential meeting between Xi Jinping and Donald Trump?
Well, I think this as follows. September 17th, we're going to find out the conclusion with ByteDance and TikTok, if it's delayed again. All right. And if that delay happens, this is everything throughout the entire process has been one theme: delay, delay, delay. And everything is just a big delay. All right. And when you see that, but when you have capital like the United States, you can always have time. People who have capital always have time. When people don't have capital, they rush in and, they bet on black. All right. And you just can't do that. You have to be in it for somewhat the long term. I'm not talking 10 years, but have a reasonable look at the market and your attention to risk and being diversified. That is the only way you will make money over the long term.
Steve, to finish the interview, I want your opinion in another different asset class, fixed income. We see a major movement in a week period in the 10 years and in the 30 years here in the US. 10-year went from 430 last Tuesday to 404, 403 right now, 27 basis point change, as well as the 30 years from almost 5% or 5% to 469, 470. Do you think that definitely they're going to cut rates around 50 basis? And do you think that the sensation is that we're going to keep going on that and probably get up to 100 basis point in 2025? No. Or you think that the maximum will be 75, 50 basis? And what do you think the market is telling us on the fixed income side, Steve? On
the fixed income side, the Fed, in my opinion, is going to have no choice but to, if they cut, it's already priced into the market and it'll be very minimal. But the idea that they're going to cut by a half a point, to me, is not possible. All right, it's not possible, and it's already priced in. Interest rates are already priced in with the sentiment of the market. But it comes down to one thing and one thing only. There's inflation, period. And you can't, the numbers are the numbers. There's inflation. It doesn't matter whether you're in the US, Brazil, the EU, there is inflation. And inflation takes its time to work itself through. And the public needs to understand that. They shouldn't be speculating on a quarter point or a half a point. Right? They have to look at the market as a long-term process. 2 plus 2 is 4. When it equals 5, let me know.
Steve, thank you very much for all your opinions. We're going to get you back. We're going to have the interest rate on the 17th. Probably we want to talk to you that week. We're going to be the New York Stock Exchange. As you know, we're the first TV station broadcasting live from the New York Stock Exchange. And definitely we're very happy for that. Thank you for your opinion, and we get back to you pretty soon. Take care.
You got it, Victor. Thank you very much, and have a wonderful day. Take care.